Decline in 2 months yesterday as investors cautiously entered the earnings season after several companies prepared the market with negative pre-announcements. And stocks declined into new intraday lows after Atlanta Fed President Lockhart said the Fed would continue to taper if all goes as expected. All right, Asian stocks are trading lower this morning with Japan leading the decline after returning from a holiday on Monday. We've seen Nikkei down over 3% and Aussie down 1.5%. Those seem to be the biggest losers on the day. If we have a look at Billy's was down, what was it, 1% in Aussie. Emerging market currencies also saw declines after the tapering comments by the Fed members. Oh, fuck. Okay. Well, then you stop.
All right, good morning, everyone. Sorry about the late start to actually trying to go there, but weren't actually broadcasting. All right, let's start out this morning looking at the sell-off we had in the States last night. You can see there every sector down across the board. We're down just over 1% on the S&P. Biggest decline in 2 months. I mean, that's pretty impressive considering we're only down 1.25%. But I think it just shows, how tame things have been, how consistent an uptrend we've been in. And I think it's just got a little bit of nervousness ahead of earnings season at the beginning of earnings. Several companies have prepared the market with negative pre-announcements. And then after Atlanta Fed President Lockhart said that the Fed should continue to taper if all goes as expected, maybe just adding a little bit more fuel to the fire. Interesting thing is that the 10-year treasuries have backed off the yields all the way down at 283 now from above 3% the other day. So, the markets, I think after the non-farm payrolls data on Friday last week, kind of combined with what else is going on, in earnings, the market's not really believing that the stimulus is coming off too soon. All right, in Asian markets, we saw Nikkei get hammered, down over 3% to close the day. We also saw Australia market down over 1%. The Hang Seng was down a bit. The Kospi was down a bit. I think the Indian markets were literally flat. Well, I think one of the markets was up and one was down. And then Shanghai was actually positive on the day. So emerging markets somehow managed to fare a little bit better than developed markets overnight. We'll see if that carries on into our local market today. I saw Brazil was only down 0.4%, where it's really been an exceptionally higher beta than the rest of the markets of recent. So, and emerging markets and developed markets have really seemed to kind of diverge over the last last couple months, and we'll have to continue to monitor that going forward to see if that continues. All right, we have JP Morgan and Wells Fargo that are going to be out today in the States. We're obviously jumping into the meat of earnings season. We have had a couple corporate action stories as of late. Google announced to buy someone yesterday. Someone's also made a bid for Time Warner. Typically, when you see that a lot of acquisition going on, very bullish for the market. So it's kind of interesting that happened yesterday, and we saw the market fall at the same time. It's something that you don't often see. So we also saw AMCU saying members still want to strike but won't give Impala strike notice yet. A lot of bad news still surrounding Impalas at the moment. And then market data out today. We've got the Japanese. We had Japanese current account balance earlier, which was lower than expected. We have French, Italian, UK CPI. We also have PPI out of the UK. And then we have industrial production out of the Eurozone. That'll be a number to watch there at 12 o'clock. And then we've got retail sales in the States later at 3:30. All right. Let's get into the maps. Okay, right now, one of the things that I think we got to look at, there's a lot of the underperforming stocks are kind of showing the same sort of patterns. We'll get into that in a little bit. We'll start out by showing the Aussie. Making a little bit of a bull flag yesterday, breaking out of the bull flag pattern. we've really, I mean, each one of these pullbacks has needed to be bought. It does kind of remind me a little bit of that long move up that we had, and then we kind of looked like sorry, that was a bad line. It looked like we were making a bull flag here in November, and we got about a day or two of head fake, and then we really ripped lower and continued that on until mid-December. I wouldn't be surprised to see that same sort of thing today. Obviously, we've already up and down 286 points, so you can see that we'll be actually significantly lower than where we closed yesterday. But nevertheless, the pattern's still what it is until we kind of drop below it. So the other thing I wanted to show you here was the S&P. The S&P making us pull back right now. Remember that level around 1808 to 1810, somewhere in that area. I'll zoom in a little bit here. Is definitely our support level. It's very defined. The breakout here, I mean, it doesn't get any more clear of a level than that. So we're really looking for, we'll call it 1809, just as a number in between those two. That 2-point spread to come back and test support. Look, we're only 10 points above that, which is not even, that's about 0.5% on the S&P. So I think that's going to come in as major support. It's also right around the 50-day moving average, and we'll have to see if that can hold today or the next day on the S&P. All right, Mr. Price, we had a real move. We did the other day. We held support here beautifully. When we came down and tested around 58, which we noted as quite a big level. We sprang up off of it out of this bull flag, and really looks like we broke to new highs yesterday. I think more or less the target's almost is very close to being reached. But I mean, I think it's very important. We setting up here. In fact, we can definitely look a little bit higher as a target on that. I don't know what I'm doing here. Sorry, I don't know why I drew that line over there. But we're definitely looking possibly up to, call it 170. About 170 on Mr. Price as a target, and it's definitely broken out here. It's incredible that the retailers have been so bad, and this one just continues to be so good in the sector. All right, Kumba. Kumba is one of the ones I wanted to talk about in terms of like a lot of the stocks that hadn't been trading well over the past several months. Looks like it could be putting in a little bit of an inverse head and shoulder pattern. None of these charts are all that clear, or all that clean, I should say, or all that classic. But I definitely think that there's some sort of credence to the formation that we're putting in here. If we continue to turn up off of the lows from the other day, I definitely could see us making a nice inverse head and shoulder rally here. Where there's a few others that look like that. BGA looks a little bit like that. Anglos looks a little bit like that. So a lot of those kind of stocks that have been a bit of bearish patterns are starting to look like they could put in an inverse head and shoulders. Obviously, we're going to need the market to cooperate in order to have that gather steam, but we'll see how it plays out. All right, CFR, the next one, we're just showing again. I mean, this thing has been frustrating in that it just continues to fall back into this channel. We got that false breakout to 108 the other day. And then the next day it was already back at that 105 level, traded back down all the way to 101 or 100.5. And you can see us now up around 100, north of 105 on a closing basis yesterday. The pullbacks are starting to get smaller and smaller and smaller here, and at some point we're going to get a nice breakout, which is going to probably give us a target up toward 112. So just watch for this again. If we can hold here above 105 in the next couple of sessions, I think 112 is on the cards rather quickly. And then the last one I'm going to show is one that we showed yesterday, but we actually got the breakout, and that's Imperial. You can see there we finally did break out. We can look, I mean, the trend line here, I think, is the trend resistance is quite well defined. You can see there we've got several touches on that line, and we've managed to get above it. We also popped above the 50-day moving average, and also got above the recent highs, of the last, call it month and a half, up around 202. So I think this is definitely going to give us an opportunity for it to come up and test the highs over the last year to date, which are up around 225. If we can hold up above this level. And that's it for today, guys. Thanks a lot.